And I would first like to start with, although I think I may have lost it on my computer, so let me find it really quickly. I have way too much open. All right. Sorry about that. I would like to start with a land acknowledgement. And we've been trying to do these in front of, ahead of every one of our meetings. Okay. The Greater Columbus Arts Council collectively acknowledges that the land we are positioned on is the traditional, ancestral, and contemporary lands of Indigenous people. We reside on land that was cared for and called home by the Kaskaskia, Shawnees, Tula, Shawnee, and Miami people and their ancestors. The land was ceded to the United States by Session 11, the Treaty of Granville, in 1795. By offering this land acknowledgement, we affirm tribal sovereignty and will work to be accountable to American Indian peoples and nations. So with that, I would like to introduce Jessica Johnson with Accounting Solutions, and she will be our expert today, walking us through taxes for artists. If you have questions, you can put them in the chat, but we'll definitely have time at the end for all kinds of questions as well. Take it away.
Thank you, Allison. Hello, everybody, and thank you for having me today. As Allison said, I'm Jessica Johnson. I am the Managing Director and owner of Accounting Solutions of Ohio. We work with individuals, small businesses, nonprofits, doing accounting, tax, and outsourced CFO services. And I'm just here today to try to give some resources for tax, also some general resources for keeping up with your record keeping. If anybody has any questions, as Allison stated, please make sure you drop it in the chat and I'll do my best to respond. If there's something that I'm not able to respond to immediately, I can definitely send a message out, and I am here to be a resource ongoing even after this session if you guys need me. We'll get started. And so what I want to do first is kind of define what a business is for the IRS. A lot of people I hear say, well, I don't have an LLC, so I don't have a business. To the IRS, a business is defined as a trade or business that is generally carried on for your livelihood or in good faith to make a profit. And so what that means is if you're doing something and your intent is to make a profit, you likely have a business. There's some other nuances and the facts and circumstances can be different for each case. But a lot of people believe that if they do not have an LLC, they don't have a business, and that is not the case. If you don't, the LLC is really just a legal shield. And you would contact an attorney to get more information about if an LLC makes sense for you. But whether or not you have an LLC, if you are a single member entity, you are going to file taxes as a sole proprietor. And you're considered that independent contractor / sole proprietor for the IRS. So I would like to kind of talk through what independent contractor versus employee is so that we can have an idea of what that means. So when looking at if you should be considered an independent contractor or an employee, there are a few things that you look at. The biggest thing is your level of control and independence. And so there's some things that you can look at to gauge, and every scenario is going to be different. So you can look at things like, where do you work? So are you working in your office? Are you going or in the studio space? Are you going out and you have a space within your client? And these won't, it's not an end all be all for one of these. So if you work in your client space, that doesn't mean you're automatically an independent contractor or an employee, but those are some of the things that you look at. Looking at how do you work? Are you providing your own equipment and supplies, or does the person that you're working for provide that for you? Do you have just one person that you're working with, or do you have multiple engagements with other people? Is it a temporary relationship, meaning, after you do this, will you move on to work with someone else? Or if you're providing a product or service, are you consistently providing that for one person? Things like that. Are you determining your own schedule? Do you decide when you go in? Do you decide how you operate, how you work? What type of work you're assigned to, what type of work that you engage in doing. And then when you get paid, are you getting paid based on a rate that was determined by the person that you're working for? Is it a salary, hourly? Do you get paid after you provide the service or product? Those are some of the things that you think about when determining whether or not you're an independent contractor or employee. The most important thing is really just, again, looking at that level of control and independence. And if you control a lot of the factors, you more than likely are an independent contractor. That's what we're going to focus on here, to kind of walk through what it's like to have a business or be an independent contractor, sole proprietor. If you are an employee, you'll receive a W-2. And some of you guys may be both. You may be an employee and you may have work on the side, or have two roles where you're also an independent contractor. And so as an employee, you'll receive a W-2. And also taxes generally come out of that W-2 based on the elections you make when you sign up for payroll. As an independent contractor, you may or may not receive a 1099. You're able to deduct your expenses, unlike employees that no longer are able to deduct expenses, but then you're responsible for paying your own taxes. And so when we say taxes, sometimes there's confusion on what type of taxes that we're talking about. And so there are various taxes. There may be like 7 types of taxes, and we can get into things like property tax and things like that. But for businesses, some of the common types that you're going to look at are payroll taxes. Payroll taxes, or if you have employees, then you're responsible for filing those taxes. And that is looking at FICA, which is Social Security and Medicare, and also unemployment, which is at the federal level and the state level. If the entity is a nonprofit, then you won't have federal unemployment taxes. And if you have employees, then you'll want to make sure that you brush up on what payroll taxes you're responsible for. And even if you have a service like ADP, Paychecks, Gusto, things like that, you want to make sure that they are filing the right applicable taxes for you. BWC is considered an insurance, is Bureau of Workers' Comp, but that is also something to think about when looking at payroll tax. There's also sales tax. Sales tax is governed at the state level. And also, so there's usually a state tax plus a local tax. And so depending on what city you're in, if you're in Cincinnati, the total sales tax rate may be different than if you're in Columbus. So you'll want to see what your local and state sales tax rate is, but usually the state is who mandates it, and you'll pay the state. So in Ohio, you'll go through the Ohio Department of Taxation through our business gateway to file those tax. You'll have to be registered as a vendor in order to process that. Sales tax is generally applied to products, but some services are also taxable services. So you'll want to make sure that whatever your business or whatever you're doing, if you need to collect sales tax from your clients, that you're making sure that you collect that so that you're not responsible for the tax by yourself. Sales tax is usually collected either monthly or semi-annually, twice a year. depending on your volume. And then the most important one that we're going to talk about in more detail today is going to be income tax. Income tax is going to be federal, state, and local. They all have their different requirements and is dictated based on the business type. For federal, it's generally across the board, same whether it's based on the business type. And so if you are a sole proprietor, then you're going to have a Schedule C, which is filed on your personal tax return. If you're a partnership, if you file as a partnership, then you'll have a separate tax return. It's a 1065 return. Or if you're a corporation, you'll have an 1120 or an 1120S, depending on your corporation type, and that would be a different return. All business types are going to be passing through your personal return, except for a C Corp. Those file their own taxes, or those pay their own taxes. However, if you are a sole proprietor, partnership, or S Corp, those don't pay their own taxes. It flows to your personal return, and then you pay taxes based on what your personal tax rate is. And then there are different state and local requirements. For the state of Ohio, up into a certain threshold, currently business income is exempt from paying state tax. However, we have what's called commercial activity tax, or CAT tax. And that is if your business makes between $150,000 and over, then you're required to pay CAT tax. If it is between $150,000 and $1 million, then your rate is only $150 a year. However, once your gross receipts, not your net, once your gross receipts exceed $1 million, you have to pay quarterly. It is based on a percentage of those gross receipts. And then local is going to be based on where you work and where you live. And so from the business side, you technically have to pay taxes to each city that you work in. So if I do work in Columbus, and then I also travel down to Cincinnati, do work there, I may have a requirement to pay taxes in the city of Cincinnati. So let's talk about different types of revenue and what that may look like when looking at filing your taxes. So we have, because we're in this technology age, we have a lot of different revenue streams. And so what is very popular now are different online merchants and point of sale systems. And so point of sale systems, you have things like Square, PayPal, Wix, Shopify. Those systems will allow you to invoice your client or your customer, and then that client and customer can pay through there, or it could be connected to your website where you receive payments if you're selling a product, things like that. And so they generally will pay, and it gets directly deposited into your bank account. And then you record it through those systems. You also have other payment collection systems. I know a lot of people collect payments through things like Cash App, Zelle, Apple Pay, those kind of systems where you may not initially invoice, or it may not be directly connected to a website, but people are able to get your handle and send you payments that way. And then there are other sources like crowdfunding, where multiple people can go on and pay for those. Starting in 2022, the IRS is trying to crack down on being able to track the payments that are going through these systems for business accounts. And so if you receive over $600 in a business account for any of these processing systems, you more than likely will receive a 1099-K. And that's just going to report the income that was received. So you'll want to be very careful with when you have these systems that it is only on the business. Because if you're getting Zelle payments through a Zelle business account and it's really personal, you don't want that to be added to that 1099, because then you have to answer why you got $10,000, but you're only recording income for $8,000 because, you know, someone, a friend was paying you throughout the year, you had lunch or they reimbursed you. So you want to be really careful about what you allow to pass through these accounts, because it will be reported to the IRS. And then you'll have to ultimately, if it was a personal payment, you don't have to owe taxes on it, but it's a whole lot easier to explain if it's passing through a different account.
Hey, Jessica, I'm going to stop for a second because we had a question, and also I have a comment on that. First, let's go back. A question about, are sales made in a city considered work in that city? So when you were talking about being in Cincinnati and paying sales tax or city tax, and Jennifer, if I'm not explaining it correctly, you can unmute yourself and explain more your question. But I'm thinking that if she travels to Cincinnati and sells things at an event there, is that considered you working in that city?
Yeah, that's exactly what I'm looking for. I had a specific instance. I live in City of Columbus, and I had a pop-up sale in Worthington. And so what do you do about that one?
So you'll want to look at each case differently, but generally, yes. So for instance, if I'm a photographer and I'm traveling to different cities, I am actually earning my income in those different cities, and it is generally considered to be taxable for each city. You mentioned having a pop-up. It's the same thing. You'll want to check with Worthington. Some cities, if it's depending on, well, it won't be sales tax because sales tax is going to be a different. So you'll want to look at sales tax and on the income tax level. But yes, technically, if you are earning your revenue in a different city, you should be recording that and the payments that you receive, the expenses for that, and that should be recorded differently and when you file your taxes. You'll see it a lot with W-2 employees. And so I have some clients that are like lawn care businesses on there, and they get a W-2. On their W-2, you have all these different cities from where they went and cut grass in those different cities. And so it doesn't always happen where people separate it out by the city, but technically that is what you're supposed to do.
Okay, well, and another complication, you mentioned expenses. Most of my expenses are for supplies. I'm a visual artist. I do mixed media. My camera's not working, otherwise I'd be on camera, but what the picture is a close-up of one of my pieces. And so expense-wise, they're not happening in the city where I'm selling, but I may be actually selling the piece in a different city.
Yes. It gets very convoluted when you're working in different cities. And so you'll just kind of want to seek guidance on how to look at that for your different scenarios.
And I wonder, Jessica, if is there a threshold, like you have to sell X amount in that city in order for you to go through that process, to make it worth it for you to go through that process?
You'll have to look at each city.
Ew.
Sure. Yeah.
I know.
Yeah.
So we do have another question from Hillary, and it's related to this. Does that apply to painting commissions too? So my answer to that would be, you are making it and you're selling it from wherever you are, even though the person who's purchasing it might be from a different city.
Correct. So that's a little different. If you're selling it from your office or wherever else, you consider to have made that revenue in the city where you are working in.
Good questions. Any others before we move on from this one? I just wanted to point out to Jessica, when you were talking about the Zellos and the Cash Apps, et cetera, that important element that really should be a part of all of your business practices is to keep your personal and your business separate. I mean, that's a really good example when you were talking about those particular platforms for payment.
Yes, absolutely. For several reasons, you want to keep things separately. One, it's easier for record keeping when you're not having to piece through what's that business, what's that personal, and look through that. But then also it looks better. So if you happen to get audited, or if you had somebody else looking for one reason or another, it shows that you have good discipline and good systems if your business account is really only used for business.
Okay.
Okay. Another, most common stream is to receive cash, check, ACH payments directly into your bank account, things like that. And so your client pays you, they can either pay you in cash or check. Cash is going to be a little bit harder because it may not hit that business bank account. So you're going to want to make sure if it doesn't, and whether it does or doesn't, that you keep records, whether you give that client a receipt and you keep a receipt book, whatever method is going to be best for you to keep those records to make sure that you record all the cash payments that you received. And the same for checks. I see a lot of people that really rely on 1099s at the end of the year to record taxes. And I think that it's common for people to think if they didn't receive a 1099, that they don't have to report any income. And so 1099s currently are only required to be sent out if a vendor or client has paid you over $600 in that calendar year. If they paid you $500, it's still taxable income. You just won't receive a 1099 from them.
Mm.
And so you really want to keep track of cash payments, again, ACH payments that you receive from all of your customers, because one, they may not issue a 1099 because they didn't hit that threshold. Two, they may hit the threshold and just don't send you a 1099, or it could get lost in the mail, whatever that is. And three, you want to verify when you do get the 1099 that the number they're reporting is correct. You shouldn't only rely on their 1099 because we don't always get it right. And so, maybe something was recorded incorrectly, something that just doesn't fit your understanding. You want to make sure that you can reconcile your records to what they also issued you, because what they issue you is going to the IRS. And so say you got all 1099s and one of them was off by $5,000, the IRS is going to wonder what that discrepancy was about. And so it's easier to correct things on the front end than correcting them on the back end. Also things like non-refundable deposits. So, say you're providing a service, you have a non-refundable deposit just in the event of cancellation, $500. The client cancels, you don't end up providing the service, that deposit is revenue. And if they don't cancel, generally the deposit goes towards their final invoice, it's still revenue. Another thing I get asked a lot is about grants. Most of the time, the grant is going to be taxable.
Mhm.
You can consult with the grantor and ask them if it's taxable. Most of the time, it's going to be taxable. Because we're in the days of COVID, there were a lot of other options. Even those, most of them were taxable, except for a couple that came through with the government. But generally, they're going to be taxable. So I just had somebody recently call the office because they were trying to determine how much to accept for a grant, because they didn't want to have to record the revenue. And so they were trying to balance should I accept this higher grant amount? Because then I'm going to get a 1099 for it, and then I have to record the revenue.
Mhm.
And it goes back to the statement that I made that no matter what the income amount is, if you were paid to provide a product or a service and it wasn't a gift just because, it is generally going to be taxable income, whether you get a 1099 or not. And so the good thing, again, and we'll talk about this more, if you did provide a product or service, you likely had some expenses. And so you'll be able to offset some of that revenue with your expenses. So it won't be as great of a taxable income amount, but it will still be taxable income.
I have a question in the chat, but before I go into that, I just want to remind GCAC, we have this in our guidelines, and we also have it in our grant agreements that anything over $600, we do send a 1099. And we want people to be prepared for that.
Mhm.
And so if you were to say if you were to get 2 grants, which is not possible right now through our support for professional grants program, but if you were to get an additional payment from something, even the total is going to be over the 600. So here's a question from Jennifer. Gallery payments and group art sale payments are in category 2 as well? Question mark.
Our gallery payments and
Group art sale payments. Yeah.
What I'm hearing the question being is if you're paid for a gallery or a group art sales, would that be considered taxable income? Is that the question?
I'm trying to figure out where you would put it, because what I was concerned with is the gallery paying state sales tax? So you get accepted in a gallery show, say a group show. They're going to take 30, 40, 50%, you get the rest. Is that considered like a straight commission? And then that would go into just your cash check type payments, and you would account for the revenue that way? Or is there a gap in the state sales tax because an actual thing, a piece of art was sold?
So go ahead. That's super helpful. Thank you for that extra backstory. So you'll want to connect with the gallery and look at your contract and look at the terms. Generally, the seller is going to be the one who is collecting the sales tax. That's how it should be.
Okay.
So the gallery that's actually selling the artwork, they should be the ones that are collecting the sales tax. And so you shouldn't have to worry about that side of it at all, but you'll want to make sure that all of that is clear when you have a contract with this gallery. So the payments that you receive for commission, that is going to be the payment that is paid to you, and that is what your income is.
Thank you. That's very helpful. That confirms what I had heard before, but I wanted to hear from a CPA.
I get it.
I just did, I wouldn't take myself to a vet to be diagnosed with something. So I'd like to hear it from the professional. So thank you.
You're welcome.
Another question, Jessica, what about murals? I've done private murals on site at people's homes, but I don't think any of them are issuing 1099s for their payment for my services.
So you're going to get a lot of that with individuals. So businesses are used to filing 1099s because they know that requirement. And when you file your tax return, there's a question. If you were required to issue 1099s, and did you? And so businesses for sure are going to want to make sure they are in compliance so that they don't have any issues with the IRS for 1099s, most of them. Individuals, not so much. And so they probably won't issue you a 1099. And so I wouldn't expect it. And I would just make sure that you record and keep track of the payments that you receive. Sometimes it's easier. Again, if you have a business bank account, That's going to make it a lot easier. And we'll talk about record keeping and keeping receipts in a little bit as well. But sometimes it's helpful if you get a check, especially if you do mobile deposit, to keep the check, because that may help you to keep your receipts, or take a picture of the check, make a photocopy of the check, things like that. Again, through your business bank account, depending on what platform it is, you may be able to click on the deposit and see a copy of the check. But in general, you just want to make sure you have a record of what was received, because you are correct. You may not receive a 1099. Were there other questions, Allison?
Oh, yep, here's another one. When I move my LLC to a different state, is there any additional tax paperwork that I need to fill out?
So,
Oh, let me stop you before you move on. So another mural related question. Is mural revenue taxable in the same way as the sale of a piece of art as a service in their space versus a physical piece I'm selling? So she's getting paid to do a mural. And she's asking, is that revenue taxable in the same way as the sale of a piece of art?
yeah, so you're saying if you're providing that, if you're doing the mural in a home in Westerville, yes, if you are working in a different city, then you'll need to check and make sure that you're not required to pay taxes for the city that you're working in. Generally, you're looking at the cities where you work, and the tax implication for when you make money in that city.
Erin, does that help? Okay. Now, back to the LLC. When I move my LLC to a different state, is there any additional tax paperwork that I need to fill out? This is from Dan.
Okay. So that's going to be, you're going to have to look at a few different things. The LLC requirements are going to be on a state-by-state basis. And so you may want to consult with an attorney to see what that looks like. Can you operate in Ohio LLC in a different state? Overall what the LLC looks like. From a tax standpoint, from a federal level, there's no difference. Again, the LLC is considered to be a disregarded entity to the IRS. And so you're either going to file as a sole proprietor, or if there's multiple members of the LLC, a partnership, or if you make another election, an S or C corp. So from the federal level, no change. From the state level, again, it's going to be filing taxes in the state where you're working, and the state where you live. And so if they're both the same, then you will likely have tax in that state. If you come back to Columbus, to Ohio, do work in Ohio, you may also have a tax obligation to Ohio.
Okay, we're good.
All right. And another common thing is bartering. And so, say I would like a piece of artwork, and in return, I'm going to do a tax return. The cost of that art is still taxable income to the artist. The cost of the tax service and accounting service is still taxable income to me. And so because money wasn't actually exchanged, a lot of people think that they still don't have to pay taxes, and that's just not the case. You will still have a taxable event if you receive if you receive something in exchange for your product or service. And so the great thing about sole proprietors, independent contractors, businesses, is that you do get, although you have to pay your own taxes, you do get to deduct a lot of the things that are required in order to do your business. And so I have listed a few of the common, just general business deductions overall. You'll have your supplies, the cost of your goods sold. And so if you sell a mural, then you'll have the paint, you'll have all those supplies that were required in order to produce that product. If we're looking at things like allocating to different cities, you can also allocate those expenses to those different cities. Advertising, the cost of, radio advertisements, mail, if you need to have run different ads on Facebook, things like that. Travel, that is business related. Bank and merchant fees, if you use those merchant accounts that we talked about, PayPal, Square, they take a fee out of your payment. So you'll have those things. You'll have to be careful on those because depending on how you record it, when you do your record keeping, what hits your bank, the fee is already out. And so say you made $50, $45 hit the bank, you'll actually have $50 of revenue, $5 of the merchant expense. And then you might have sales tax in there too. So there may be a little bit of adjustments needed there. You'll have professional services, your attorneys, your accountants, other consultants that you may use in your business. If you rent an office or a studio, if you have employees, they'll have wages and your payroll taxes. If you utilize contractors for your business, you'll have your contractors, and then you also have to make sure that you stay in compliance with 1099 rules, business insurance that's other than health. And there's a wide variety of other deductions. Generally, any expense related to your business, your service, the product, it more than likely is deductible. As long as it is related to the business. There are some other nuances where, things may not be deductible. There are things, and we'll on the common, the number 3, the common misunderstood, we'll kind of tackle some of those. But generally a good rule of thumb is if you used it for the business, it more than likely is deductible, especially if it doesn't also have personal use. Common self-employed deductions that are in addition, health insurance. So if you don't also have a job that has medical insurance, or if you don't have a significant other, a spouse, where you're on their insurance plan, you may have to go to the marketplace to get health insurance or another means for getting health insurance. So that is also deductible. It's not directly on that Schedule C, but it is a deduction that is available. Also, retirement. If you have a retirement plan, depending on the type, if you have a traditional plan, then you may qualify for a tax deduction. There's also something called a Roth plan that is after tax, so there's no direct deduction there. However, there are some other benefits. So you'd want to talk to a financial advisor for those resources on what makes the most sense for your retirement options, but that could also help you to save on taxes. And then there's self-employment tax, which is your Social Security and your Medicare. When you're a W-2 employee, your employer pays half of it and you pay the other half. So each party pays 7.65%. When you're self-employed, you have to pay both parts of the tax. So in total, you pay 15.3%. And that is what goes into your Social Security and your Medicare bucket. However, you can also deduct the employer's side of that tax. So that will help to reduce the total income tax that is there. So when you're filing your tax return, you have both the self-employment tax and the income tax. And self-employment, again, is going towards your Social Security and your Medicare buckets.
Jessica, we have the question, are fees for QuickBooks subscription deductible?
Yes. Business subscriptions, softwares, those things, they are all subscription, or they are all deductible. Things that make it, fine line. So QuickBooks, that is for your business accounting software. If you have, I don't know, something that could be used on both sides. So say if you have a Pandora account that you use in your studio to play music when customers come in, you'll want to make sure that it's business use only. Otherwise, it may be, it may start to teeter the fine line on whether or not it's deductible. So some of the common misunderstood deductions I wanted to point out. So I see a lot of people keeping track of gas receipts for your vehicle. You can do that for sure, but you also have to keep track of your mileage, especially if it is not a business only vehicle. If you have a mixed personal and business use vehicle, you have to keep track of your mileage, because that's how you'll determine what percentage is business use and what percentage is personal. Then at the end of the year, you can decide whether or not, so say 50% of it is business. At the end of the year, you can decide if you're going to apply the federal mileage rate, which is determined for each year, towards those business miles, or if you're going to take 50% of all of your car expenses and deduct that. A lot of times the mileage gives you a greater deduction. So a lot of times people don't even keep the auto receipts, but you definitely could do that and make that decision at the end of the year, which is a better deduction for you. Depreciation is another one, and right up under it, equipment. So when you buy a computer or camera, things like that, depending on the cost of it, it may fall into a depreciation bucket. Generally, I look at if it was over $500. However, there are protections right now and elections right now that you can make to be able to depreciate the entire thing in the current year. And so even though it is falling on a depreciation schedule, you likely are able, depending on what equipment it is, you likely are able to write off the entire thing in the current year if that is what you desire. And so you'll want to talk to your accountant to see if whatever equipment that you purchase, what is the best way to record that when you file your taxes. Another thing is home office. There are two ways that you can deduct your home office expense. And that is if you have a dedicated space in your home where you only use for business. And so if you have a room, if you have a desk set up in your bedroom in a little space where you do work at, that is not a dedicated home office. You have to have a space where you can only use for business. And so once you identify that space, you have to know what that square footage is of that office. Generally, you'll want it to be a room. So whatever that square footage is of that room, and then whatever the square footage is of your entire home, and that gives you a percentage. And so you can take that percentage and apply to all of your expenses. So if you're in an apartment, you can apply it to your rent. If you are in a home, you can apply it to your mortgage interest. You can apply it to property taxes that would have been paid if you're in a home, your utility bills, your insurance, those type of expenses. You can apply that percentage there. Or you can do what's called a safe harbor method. If you don't want to keep track of all your expenses, your utility bills, those things, you also can take the safe harbor election, which gives you $5 per square foot up to 300 square feet. So if I have a 100 square foot office space, then I can take that $5 and I will have a deduction of $500. If I have, up to that 300, which would be a maximum of $1,500. And so you'll just want to determine which way is better. One for your tax deduction and two for your time. Meals is another one. It used to be called meals and entertainment. The entertainment part of it went away with the act in 2017. And so entertainment used to be if you took a client out to a baseball game to talk about business, then you could write it off. And so the entertainment side of it is no longer an option. However, meals are an option. And so if you take a client out to dinner, to lunch, breakfast, over coffee, talk about business, whatever your business purpose is, that meal is deductible. It's generally deductible at 50%. However, for 2021, because of COVID, meals are 100% deductible. And so that's not something that's generally going to stay, but that is something different for last year. But generally, it is going to be 50%. So you would put the entire amount in your system when you do your taxes, but only 50% is actually deductible on your return in most years. When you do have that meal, you'll want to make sure you keep track of who you ate with and what the business purpose was. And so again, when we talk about record keeping down the line, that's going to be one of them. If you need to write it on the receipt, write it on your calendar, whatever's going to make the most sense, you want to make sure that you have that listed so that if you get audited by the IRS, you are able to track that information. And then charitable contributions is another one that is misunderstood sometimes. So if your business or your entity, you as a sole proprietor, if you gift a charitable contribution to a nonprofit organization, that actually does not get written off on your business return, if you're a pass-through entity. So unless you are a C Corp, that's not going to be directly written off on your business return. It flows to your personal return on what's called the Schedule A. And whether or not it's deductible depends on how many other deductions you have. The standard deduction got raised to a higher amount. So it's a little over $12,000 for individuals, a little over $24,000 for married couples. It's a little over 18 for head of household. The rates change every year. But if you don't have enough deductions to itemize on your Schedule A versus doing the standard deduction, then that charitable contribution actually doesn't help your bottom line. It helps the organizations, and it's still a great thing to do. But I think that sometimes people don't understand and they think that it's always deducted, and it may not be.
Yeah, Jessica, I had a question related to that because particularly visual artists are often asked to donate a piece of work to a nonprofit for their fundraiser. And so what I'm hearing you say is that that doesn't count as a charitable deduction for the business, but possibly on your personal side.
So that's a great point. Services provided are not allowed to be deducted as an in-kind. So in-kinds are not allowed. And the reason why is because you also would have to record the revenue. So they will kind of offset each other. And so if you're going to record the expense of providing, of the artwork, you would also record the revenue and it would offset it. But the IRS has explicitly stated that providing that service is not a deduction. Now, if you, and the art that you're donating, you have the service piece to it. Now, if you had, the supplies, all that stuff that that you use to create it, that is a deduction. But say you were going to put a $300 price tag on it, you can't deduct the $300 that you would have made for selling it.
We have another question. You can go ahead and unmute yourself.
Okay, can you guys hear me?
Yep.
Okay, thank you. I wanted to know, so the supplies, right? So I obviously that's gonna be, I haven't done it yet, but that I know that's I have to fill it out for GCAC because they provided that grant check. Can I also use that as a deduction for my business, for the business section of my tax return application deduction? Does that make sense?
Yes. So I think what I'm hearing is that you had to provide information to GCAC to let you know what your costs were. And you just want to make sure that you can deduct that on your return.
Yeah, so they cut me a check for basically as an individual artist, and I gave them the list, right, of the expenses. And I have to fill out a form for them, a W-2 for them, rightfully so. And so I wanted to know, can I also use that as a business deduction expense under supplies as well?
Yes.
Okay, thank you. That was my question.
All right. I'm looking at the time. So Allison, feel free to still let me know if there are any questions. I'm going to try to get through. So we kind of talked about record keeping already. And so in general, we talked about keeping your business and personal separate, having bank, but not only bank, but your merchant accounts, your Zelles, those kind of accounts, having a business account separate from your personal account. And again, for the various reasons of being able to keep track of your records, but also, for the streamlined process if you get audited or if you're trying to go back and recreate your records and systems. You also want to keep all of your business receipts. And so that gets cumbersome sometimes. What I generally say is have 2 folders, one folder for income, one folder for expenses. Throw it in the folder. You don't have to worry about organizing it and sorting it. If you have accounting software, if you don't, you may want to sort it, or you may want to along the way start to tally it so it doesn't get overwhelming over time. But the reason you want the actual receipts, so once if you need to go back to it, you can. But if you get audited, they want to see the receipts. If I go to Walmart and I say I got supplies, the IRS doesn't know if I really got supplies or if I got groceries. And so the receipt is going to tell what you actually purchased, and that's what's going to hold up in the audit. They won't just accept bank statements because the bank statement will not say it. Also, on receipts fade. And so you may want to look, if you have a lot of things, if you're online, so Amazon, online shopping is great because you'll get an email. And now even at a lot of stores, they'll ask if you want an email receipt. I like to get the receipts emailed because receipts fade. So you may want to make a photocopy of your receipt or use some kind of app that lets you take pictures and save it. Or some banks, like I use Chase, and now Chase will let you take a picture and attach that picture to your purchase or whatever your line item is. So whatever makes the most sense. Even if you take the picture, you use the app, still keep the receipt. Even if it fades, at least you had it. A mileage log for tracking your mileage. At the end, I provided some resources, but you can either have a logbook in your car or you can use an app that works for it. And then just having some kind of system that helps you to manage the process throughout your year. Again, the receipt management that we talked about, or an accounting software like a QuickBooks, things like that, or even an Excel spreadsheet that helps you to track. Keys to success.
We have another question.
Okay, go ahead.
No, I was gonna say, she had a valid point when she just said, and for those, I don't know who use it or who don't, but like eBay or Amazon, usually when you make purchases, right, after you make the purchase, they'll usually send you like an email link like, hey, your order is on the way. But if you go to your Amazon or eBay I'll use the Amazon example. If you go to your orders page and click on whatever it is that you purchase, like the individual item, it'll show like, you know, what you purchased, the price amount, and taxes and all that stuff. And for me, like I just usually copy and paste that and use that as a receipt, so they can't say anything to me and they see what it is that I purchased. But outside of that, the other thing, quick question that I had was for percentages. And so for mine, I have it broken down when it comes to like for the business side of it, as far as like workers' comp, taxes, and things like that into percentages. And for the tax portion of it, which is what we're dealing with right now, I have it, I think is at 20%. Do you guys have a recommended percentage amount when it comes to that? I know obviously the more you make, obviously the more you pay, but for up and coming, like I think mine is at 20%. Do you guys have a recommended like amount for that section as far as
So,
what we know?
so it really is a case by case basis. So if you look at payroll taxes, I usually say look at 8 to 9% because you are for the employer, because you already know that 7.65% is going to be on those FICA taxes. And then you have workers' comp, which is different depending on what the job and the role is. And so, and then those unemployment taxes, which have a cap. So 8 to 9% is usually good with those percentage. If you don't have employees, but you're looking at self-employment tax, again, that's that 15.3%. That's going to be on the net. And then you also have on top of that your income tax. So if you've been in business for a while, things are about the same or they're at least predictable, you can really start to look at your returns and get a good idea of how much you should be saving. Also, to avoid penalties, as long as you pay a certain percentage of what you paid last year, then you avoid penalties. So if you've been doing it for a while, you can really start to narrow in on what that percentage is. So like you said, you're at 20%. That might have come with some planning based on historical amounts. If you don't have anything to base it off of, I generally say save 25 to 30% of your gross receipts for taxes. Maybe hard to do, maybe impossible. But without knowing anything else, it's really hard to gauge where you should be. Service businesses don't have a lot of expenses, and so you won't have a lot to offset that income. Products, you may. So, if I sell something for $10, it may have cost $5 to do, then I know at least I have those expenses. So without being able to go into detail on each level, I usually just say save 25 to 30%. Worst case scenario, it was too much and you don't have to pay all of it in taxes. Hopefully that's the case. But at least you don't get surprised and you don't have to try to scrape the money again. When looking at W-2 versus contractor, W-2 business, they will save your taxes for you and you have to pay your own. Does that help?
Yeah, that makes sense. I mean, for mine, it's up and coming. So this is like the first year. And so obviously by default, I'm gonna have a lot of deductions, whether from like a licensing standpoint with trademark and domains, and then like art supplies and all of that stuff. And it's just me, there's no other, what do you call it, employees. That's just like the, I guess, standard percentage that I have it at right now.
Okay.
So I feel like I'm in the safe range.
Yeah. So feel free to shoot me a note. I want to be respectful of time, but I'm happy to chat about anything you may have questions on that. And so when we look at keys to success, creating a budget and a pricing strategy are huge. And so you want to kind of look at what where your expenses align with the net that you're trying to get to. Also determining if you're going to use professionals for certain services, for your advertising, for your accounting, for your bookkeeping, for your taxes, for your legal work, what outsourced services you need for your business to be effective. And you put that into your budget and your strategy. And so once you work it in the budget, then you determine how much you need to sell or do so that you can meet those goals. Also determining what systems you're going to utilize so that you're more efficient. So again, your QuickBooks, your record keeping software, your Mile IQ, those kind of things. What systems, even if it is a planning or a CRM system, what systems are going to work best for you so that you can be more efficient? And then planning and saving for taxes so that you can minimize surprises and over deducting. And so one of the big things that I always get, of course, you know, paying taxes isn't fun, right? So we want to be able to minimize that so we don't pay enough taxes, but you have to be careful because you have to look at your long-term goals. And so if I want to go get a mortgage or a loan or whatever else, or when COVID happened, people were impacted. Those systems, those entities, they're going to look at my tax return. And if I have had so many expenses that my net income is low, I may not qualify for whatever loan or mortgage that I'm looking to get. And so you really want to be mindful. Again, you know, if you had those expenses, you had them, it is what it is. But a lot of times, you know, I think a lot of people kind of teeter that line because they don't want to pay a lot of taxes. And what I would rather people do is plan in advance, really try to manage, you know, again, setting that money aside so that you don't feel like you have to over deduct so that you can meet this tax goal, because you save for taxes throughout the year. And so it's not going to be a heavy burden. There's some important deadlines you want to be mindful of. Most sole proprietors are going to be looking at the 1040, the individual tax return. That deadline is April 15th. If you have a partnership or S Corp return, that deadline is on March 15th, so that you can issue the K-1s to your members. And then you also, if you are going to file an extension for 6 months, then that deadline for the extension is on those dates. Quarterly payments, if you are going to owe more than $1,000, then you need to pay quarterly. And so those deadlines are going to be on these dates. Keep in mind that if these dates fall on a holiday or a weekend, then the next business day is the effective date. So for instance, this year, April 15th is on a federal holiday. It's on a Friday, but it's a federal holiday. So the deadline is actually on Monday, the 18th. And then the due date, if you owe taxes, is actually on that filing deadline date. And so, in general, if it's April 15th, that is actually the date that your payment is due. Even if you file an extension, your payment is due on April 15th. If it's not paid, then you likely will get hit with a failure to pay penalty that is based on the amount that you owe. Sometimes it's hard to know when you do that extension, how much you will actually owe, but that it is due then. And then I just provided some resources. So take a screenshot, or when this comes back out, you'll have helpful accounting software, QuickBooks, Wave app is another. There are a lot of different softwares out there. Tracking systems for receipts, Expensify is one. Mile IQ is helpful for mileage. And then for small business help, score.org. I'm hearing is very helpful. There are a lot of free volunteers that can help with different business consults that you need. And so that may be a good resource to tap into some retired professionals that may be able to help for free. That could be business coaching, it may be accounting, it may be different things that you may be able to get those services for free. And then if we have any other questions, if we have time for them, that I'm open.
Jessica, would you mind sharing? I thought there was a slide that had your contact information on it.
Yes.
Thank you. And if anybody else has questions, feel free to speak up. Well, this was really good. Thank you very much. I know it's overwhelming, everybody. But that's why we have experts like this in our community who step up to help answer questions and share their knowledge with us. So I appreciate Jessica very much. I wanted to let you know, oh, yeah, Erin said she'll have a million questions in a few weeks, which is the way that works, right? We have another workshop on March 10th that is called Protecting Your Art. It's about contracts, trademarks, copywriting, etc. So we'll be promoting that. I'll follow up with an email to all of you. As long as you've signed up through Sign Up Genius, I'll follow up with an email. If you haven't, then send me an email at abarrett, BARRET, @gcac.org. I'll also send you the link to sign up for this Protecting Your Art workshop too. So thank you all. I appreciate your engagement, and everyone have a wonderful night.
And that
Thank
will
you,
be,
everybody.
when will you be sending that out? When should we look out for that?
So I'll send the email hopefully tomorrow. But the recording won't be posted for a couple days yet because we're in the middle of a bunch of grant cycles, so it takes a while to get things uploaded.
That's fine. No,
Yep.
and when you said the grant cycles, I'm guessing you mean for 2022.
Correct.
Okay, and that's not out yet, is it? As far as like,
Yep, support for professional artists. The first deadline is February 1st. We also have for organizations, project support grants are open as well.
when will the individual artist ones be out for 2022?
Yeah, so that's what our individual artists grants are called, support for professional artists. So one thing I would note is that you need to complete your final report before you are eligible to apply. It'll block you. And you have to wait at least a week for us to have the time to review the final report and approve it so that you'll be able to apply for the next one. Everything's on our website. We have 3 grant cycles for individuals this year. So if you can't make it into this one, don't fret, we'll have another. And let us know if you have questions.
When you say final report, you mean like the expense report for the past grant that you guys?
Correct.
Okay, okay.
Correct.
That makes sense.
Yep.
Thank you.
You're welcome. Any other questions? All right, everybody, have a great night.